Here's your quick recap to keep you up to date. The U.S. government has officially reopened after weeks of shutdown, and it's already shifting the tone across global markets. Now, this isn't just a Washington headline. When the government reopens, it brings clarity back into the system. Federal data starts flowing again, funding resumes, and investor confidence usually follows. And that ripple effect is showing up in crypto too. Sources like Reuters, Business Insider, and the Economic Times all report the same pattern. As the shutdown ended, risk appetite returned. Stocks moved higher, the dollar softened, and digital assets found fresh attention from traders who had been sitting on the sidelines. So today's story isn't about politics, it's about sentiment. When uncertainty fades, money looks for growth again. And right now, crypto is back on the radar. Here's what triggered the move and how the markets responded. The turning point? The looming end of the U.S. federal government shutdown. A funding bill passed the Senate and the House vote was seen as a formality. The reopening of Washington became more of a certainty than a gamble. According to Reuters, markets had already priced that outcome in, meaning the vote was more symbol than surprise. So what happened next? Capital began to shift, risk assets got a fresh lease. According to Business Insider, the broader reopening trade kicked in. Stock indexes rallied, the dollar softened, and crypto slipped in alongside other risky trades. But here's the catch. While the reopening brought relief, the shutdown itself left a drag. Without full federal data, agencies like U.S. Securities and Exchange Commission were hampered, and that delay impacted everything from policy clarity to listing approvals. A piece by Cointelegraph highlights that this isn't a clear-cut rebound. A lot depends on the next policy moves. For the crypto world, that logic reads, the headline of government reopening is positive. But the real action happens when the delayed data flows, the regulators resume full operations, and liquidity begins to return. So far, the trigger is pulled, the market shifted, but the full reaction is still unfolding. So, what does the U.S. government reopening actually mean for crypto? Let's start with the basics. When Washington goes quiet, markets lose visibility. Economic reports get delayed, regulatory decisions stall, and uncertainty starts to creep in. That uncertainty drives investors towards safety, cash, gold, and bonds, and away from risk assets like crypto. Now that the government is back online, the opposite begins to happen. According to Reuters, traders are expecting key data releases. Inflation numbers, jobs reports, and new Fed statements, all of which can help investors recalibrate risk. That means liquidity and attention are flowing back into the system. And as Business Insider put it, the reopening has triggered what they're calling the risk on trade, where money starts to rotate back into equities, tech, and yes, digital assets. But there's another layer here. As CoinDesk noted in its analysis, the government reopening also means regulators get back to work. The SEC, the CFTC, and the Treasury. That's good for progress on things like ETF approvals, but it also means scrutiny returns. So the same reopening that fuels optimism can also bring regulation right back into the headlines. In short, crypto's short-term reaction is positive. More liquidity, more attention, and more optimism. But longer term, it's a double-edged sword. Regulation resumes, macro data will start moving markets again, and volatility could spike as traders digest real numbers instead of guesswork. The government reopening isn't just a restart, it's a reset. And for crypto, that's both opportunity and challenge. So where does this go from here? Now that the U.S. government is back open, we're entering a stretch where clarity replaces uncertainty. And that always changes how investors behave. Here's what to watch. First, the return of data. We'll start seeing fresh economic reports again. Inflation, jobs, and consumer spending. Those numbers will tell the Federal Reserve how aggressive it needs to be. And in turn, they'll tell us whether liquidity keeps flowing or tightens up. A key signal for every crypto trader second. Regulatory movement. Agencies like the SEC and CFTC are back at full strength. That means we could see progress or new roadblocks on pending ETF approvals, stablecoin frameworks, and digital asset oversight. As CoinDesk noted, the reopening gives regulators the green light to move forward on delayed cases and filings. Third, sentiment and flow. If the risk-on trade continues, we'll likely see capital rotating back into growth sectors and digital assets. But if the first wave of data looks weak, that optimism could fade just as fast. In short, keep your eye on the bigger picture. Government reopening isn't just about politics. It's about reopening the pipes of information, liquidity, and regulation. Those three forces will decide whether crypto's recent rebound turns into a real trend or just another temporary pop. And that wraps up your recap on the US government reopening and what it means for the crypto markets. The short version? Washington's back in business. And that changes the mood across global finance. Data is flowing again, liquidity is coming back online, and investor confidence is tentatively returning. That combination usually favors risk assets, and crypto sits right at the center of that rebound. But this is also where patience matters. The same government reopening that restores momentum will also bring regulation, scrutiny, and fresh market reactions to real-world data. So don't mistake this for a one-way rally. It's the start of a new phase. As Reuters put it, markets love clarity, and the government reopening is clarity restored. And for crypto, that clarity could be both opportunity and test. Thanks for tuning in and staying informed. If you found this recap helpful, make sure you subscribe for daily updates just like this.